Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ACADIA Pharmaceuticals Inc. quarterly report. ACADIA Pharmaceuticals Inc. offers a range of businesses and services including development and commercialization of medicines for central nervous system, CNS, disorders, treatment of hallucinations and delusions associated with Parkinson's disease psychosis through NUPLAZID, pimavanserin, treatment of Rett syndrome through DAYBUE and ACP-2000, 591 treatment of schizophrenia, Prader-Willi syndrome, Alzheimer's disease psychosis, Lewy body dementia with psychosis, essential tremor, treatment-resistant depression, and other CNS disorders through various pipeline products, licensing agreements for trophantide, Rett syndrome, and RNA-based medicines for severe and rare genetic neurodevelopmental diseases of the CNS. ACADIA Pharmaceuticals Inc.'s stock price surge. A year of positive momentum in the past year, ACADIA Pharmaceuticals Inc.'s ACAD stock price has experienced a significant increase of over 25.87%, driven by several key events that have boosted investor confidence and fueled growth. The company's fortunes took off with a favorable patent ruling for its flagship product, NUPLAZID, in May 2025, which extended the protection of its 721 formulation patent until 2038. This legal victory was followed by strong third-quarter financial results in November 2025, where ACADIA reported an 11% year-over-year increase in total revenues to $278.6 million, surpassing analyst estimates. The company also raised its full-year revenue guidance for 2025, further solidifying investor confidence. The consistent growth of its key products, NUPLAZID and DAYBUE, along with a robust clinical pipeline, has sustained the positive momentum for ACADIA. As the company continues to expand its product demand and diversify its revenue streams, it is likely that this upward trend will persist in the coming months. The primary drivers of revenue growth or decline for a company are multifaceted. On the growth side, key factors include the success of existing products such as NUPLAZID and DAYBUE, potential sales from product candidates awaiting approval like ACP-204, milestone payments from partnerships, royalties from international sales, and achievement of development milestones related to ACP-711. Conversely, revenue decline is often driven by the failure to develop new products or acquire existing ones, inability to generate significant revenues from product sales, and high expenses associated with commercialization and ongoing development efforts. These factors highlight the importance of strategic planning, effective partnerships, and efficient resource allocation in driving revenue growth and mitigating potential declines. Net income and profit margins. Overview. The company's net income has experienced a significant surge, with a $39 million increase in Q3 2025 and a $34.7 million increase in YTD 2025 compared to the same periods in 2024. This translates to an impressive 118% and 42% growth, respectively. The operating margin for Q3 2025 also saw a slight increase, rising from 12.7% to 12.8%. The primary driver behind this growth is attributed to the substantial rise in net income, assuming a similar revenue growth rate. The company is generating a significant amount of positive operating cash flow, indicating its ability to generate sufficient funds from its core business operations. The data shows that the net cash provided by operating activities has been steadily increasing over time, with notable figures including $143,119 on page 2 and $158.6 million for the 9 months ended September 30, 2025 on page 27. Furthermore, both 2024 and 2025 have shown positive operating cash flow, with amounts of $117,338 and $158,567 respectively. This trend suggests that the company is financially stable and capable of generating sufficient funds to support its operations. The company's debt and interest expenses. A shift in financial landscape. A review of the company's financial summary reveals a notable decrease in debt level from $454,963 to an unspecified amount. This significant reduction suggests a proactive approach to managing debt by the company. However, interest expenses do not appear to have undergone substantial changes, except for potential increases due to tariff-induced cost hikes. The company's financial performance varied across different regions and segments in the past year. Notably, North America was a standout performer, achieving success on page 19. In contrast, several areas struggled to meet expectations. European countries were among those that underperformed, with challenges highlighted on page 33. Additionally, countries with government-directed cost containment programs, such as EU member states, also faced difficulties in this area. Furthermore, markets where third-party payers are developing sophisticated methods of controlling healthcare costs also experienced poor performance. Management is outlining a multifaceted strategy for significant long-term growth. This includes developing their current portfolio, expanding their pipeline of product candidates, and entering adjacent areas of rare disease through strategic business development. However, they acknowledge several key risks that could impact this strategy, including commercialization challenges, regulatory hurdles, and potential setbacks in ongoing or future development efforts. The company's financial results are expected to be impacted by various factors such as commercialization success, geopolitical developments, and global economic conditions. Management is also concerned about the impact of tariffs and trade restrictions on their business, as well as potential disruptions from macroeconomic developments. To mitigate these risks, management plans to develop, acquire, or in-license other product candidates that fit with their current products and capabilities. They are also focused on ensuring compliance with healthcare laws and regulations, which will involve substantial costs. Overall, the company's outlook is cautious, with a focus on navigating potential challenges while driving long-term growth. Acquisitions and divestitures overview. The company has made strategic decisions regarding its assets through acquisitions and divestitures. Notably, there have been no acquisitions identified in the extracted summaries. On the other hand, the company has engaged in two significant divestiture transactions. 1. In 2015, the company licensed worldwide intellectual property rights related to pimavanserin to ACADIA Pharmaceuticals, GmbH. 2. A second licensing agreement was made with ACADIA GmbH in 2020, involving additional related rights. These divestitures demonstrate the company's willingness to strategically manage its assets and partnerships to achieve its goals. Concerns surrounding inventory buildup and supply chain disruption. The company faces significant concerns regarding inventory buildup and supply chain disruption. Potential risks include third-party distributors and pharmacies terminating their agreements, leading to supply shortages. Tariffs and trade restrictions on pharmaceutical imports from China pose a substantial threat, as do targeted tariffs or other trade measures specifically aimed at pharmaceutical products and ingredients. Furthermore, the reliance on third parties creates vulnerabilities in manufacturing facilities and API supply due to geopolitical/macroeconomic developments. Delays or costs associated with replacement arrangements are also a concern, as is the limited control over third-party manufacturers' quality control and compliance with CGMPs. Additionally, manufacturing difficulties due to resource constraints, labor disputes, or unstable political environments can lead to inventory buildup and supply chain disruptions. The potential loss of qualified personnel, failure to comply with regulations, and delays or interruptions in supply chain operations also pose significant risks. That concludes the financial summary for ACADIA Pharmaceuticals Inc. Feel free to comment below, and I will be happy to answer them when possible.